Stephen from Share Navigator with a stock market update on April the 17th. So you're looking at the chart here is the S&P 500. So as you can see, we made another low yesterday. So this short-term downtrend is confirmed. I've put in a bit of a support line here just to kind of marry back with the gap up here. And it was previous resistance on other times, so that might act as support. It's probably the last bit of support we'll get until about 4,900. So if that breaks down, um, yeah, I think we could go to 4,900 at a minimum. Just in terms of RSI, below 40 for the first time in a while. And then the 5-day RSI is approaching 20, but hasn't quite gotten below it. So that would tell me that this actually could move lower. We could, momentum could continue lower. Now, a bit of news since yesterday, we had Jerome Powell speaking, and he suggested that inflation may prove to be stickier than anticipated, and he kind of insinuated that maybe it's going to force the hand on rate cuts. And then in the same breath, he more or less tried to suggest that there wouldn't be rate hikes. But it's interesting that the narrative has totally shifted from rate cuts to we're not doing rate hikes. So to me, there's a little flag in that. So yeah, I think as long as the bond yields, I keep saying it, the 10 years over 4.5%, I think stocks are going to struggle to gain a foothold. That's my own view. And then, of course, we've got all the tensions in the Middle East. Israel have vowed to retaliate. In what shape or form against Iran, we don't know yet. And that could obviously be another banana skin for the stock market, because if it's something there that triggers Iran to, retaliate again, and we have this tit for tat going on, obviously it kind of raises the escalation to a new level, and obviously the uncertainty that comes around that. So there's a lot of uncertainty out there, and it's nearly getting forgotten that we're in the middle of earnings season at this moment in time. So earnings season actually has been quite good so far. I mean, most of the financials have delivered, but the market is literally looking through earnings at this moment in time, and obviously focusing in. I think the real story is obviously the Middle East and interest rates. So just looking at IWM as well yesterday, which is the smaller cap stocks, you can see that sold off 0.37% again. It went down further than the S&P did itself, and the Nasdaq. So again, as you would expect, in a higher interest rate environment, smaller caps get punished more. So this is coming down nicely to the 200-day moving average. So if and when we do get an indication to go long, small caps might be the way to go. So if interest rates on the 10-year, for example, hit 5%, there's two trades I like, because I think that's probably where they will top out. Something like the IWM, and then the TLT obviously becomes a trade that we could look at as well at that moment in time. And I'll speak about that in a second. So for right now, I would not be going long on the S&P 500 right now. It's not ready to go yet, in my opinion. There's still too much risk out there. If we got down to this 4,900 level on the S&P 500, that's a different kettle of fish. I think I would start building a long position down there. But again, I would be waiting for my technical indicators. And the 200-day moving average, don't forget, is below 4,700. So we could actually make a trip all the way down here before we get ourselves into a spot of bother. And remember, when interest rates were this high previously last year, the market sold off 11%. And an 11% sell-off from the recent high here is actually down at the 200-day moving average. So it's not beyond the realm of possibility in any shape or form. So right now, the short futures position that we have on is really improving well for us. We sold the put options on the futures yesterday at the 4,900 strike. If the market drops below 4,900 or whatever, we'll probably just close both of those trades down and maybe open up another short put futures at 4,800. In other words, we'll start going long on the market at 4,800, in and around that area, but we'll wait and see what the velocity of the move is if it does indeed get down to those levels. I just wanted to bring your attention to the active trader watch list. So as of yesterday, we're saying to people, whilst this uncertainty is out there, hold off buying into the active trader stuff, but we're going to continue to build our watch list. And you can see we've added a number of stocks here: Aviva, So if we looked at Aviva, you can see this RSI got below 20, it's crossed back above it. So that's based in the London market. So if we were going to keep trading, that will be a buy right now. Another one based on the London market, a company called Informa, that's down below 20. Live Nation, one of our US stocks on our watch list. I'm liking this because we also have the 14-day RSI below 30, and we have the 5-day RSI below 20 and significantly below 20. So that could be worth a look shortly. Halliburton, one of our longer term plays, is actually down below here as well. So for those of you who are considering a move into Halliburton, maybe when that crosses back above 20, that's maybe one of the sectors. Think about it. High oil prices, these stocks are going to do well against that backdrop. ICFIA was added, Autodesk was added. So a lot has been added here, but I want to just be clear. We're not ready to trade any of these yet until we see the market bottom out, and then we can start considering those. So in the meantime, we just continue to build up our active trader watch list. As regards our long-time buy and hold sell watch list, a couple of them have been taken off because obviously as the share prices have fallen, they've now come back to more reasonable levels, but there's still some on here. So these are stocks, as I said, that if I owned now, I will be looking to sell. And then in our long-term buy list, again, I would be patient and hold off and wait buying anything pretty much. There may be some little exceptions in here, the likes of Nike, for example. That's kind of bucked the trend in the last few days. And if you think about it, Olympic year, etc., like that, I think you could do worse than positioning yourself into something like Nike. But just in generally speaking, I would hold off buying equities for now, until we see where this market is going to bottom out. Moving on to the bond yields, and this is really where I want to talk. Look where the yield is now, 4.65%. It's moving higher. It looks like it's going to tip 5%, but I think this is where it tops out. So if that goes to 5%, TLT comes on the cards again. Look at TLT. The last time the 10-year was at 5%, look where it got down as low as 83. So you could be now selling puts, maybe the $85 puts in these if you wanted, or the low 80. So this would be a trade I'd be happy to go long on when the interest rate hits 5%. I would literally want to buy into TLT and just hold it. Because when the interest rates gets back below 4%, look at the move in TLT. It went from 83 all the way up to nearly 100. And that was, that's a significant move, guys. That's, over 20% move in this, just from the interest rate moving down 1%. So we wait for the interest rate to top out for us. When it gets down here, we will be going long on TLT. So now TLT is something we got to keep an eye on from now on. Now it's back in play again. And again, the 10-year here is rallying quickly towards 5%. The comments from Powell yesterday don't help. I think he's more or less signaling, the rate cuts might have to wait for a while. And against that backdrop there, traders might push this up to 5%. And the dollar continues to kind of just hover here and there where it recently strengthened. But it wouldn't surprise me if we get down here into this 105 level. I think at that level, I'd be happy to go long. And just as a kind of an aside to that, we've got 2 buy signals in a row on RSI here. So if you did want to take a punt on the euro dollar, the way I look at this is, well, what's my risk here? It could go down to 105, which is not a huge move downwards for this. So 1%, and you're kind of going, okay, it could be wrong by 1%, and then in the long term, we're probably going to migrate back to 112. So I can see a worse trade on at the moment than going long on the euro dollar. So you can do that, as I said, by buying the euro dollar futures. You could, if you have a spread betting account, you could bet on the euro dollar, go long on that, or you could use FXE as a proxy. And FXE is the exchange traded fund that tracks the euro dollar. So if I just brought that up now, active trader watch list, it's in here somewhere. There it is there. So you can see here now, like this might drop to 97. We're at 98 at the moment. So here, you might sell the $98 puts here on this. That might be a nice trade there on FXE. You're not going to go too far wrong. or you might buy call options on FXE, and maybe give it a 2-month window or something like that. So FXE and the euro dollar, probably the only trades I would consider now, and maybe short puts on TLT as well. So they're all really this high interest rate linked. That's the kind of linkage on those type of trades. Just moving into energy there, natural gas is still fighting down here. It's kind of just messing around here at this minute in time. What we want is to break above this 50-day moving average, trade above it consistently, and then take out 2. So it's trying, but we're not quite there yet. Crude oil continues to just consolidate up here at the higher end of its upper channel. And I think, again, that could spike in a heartbeat depending on what happens in the Middle East. So we just have to keep an eye on that as well. And metals here. So silver has taken a bit of a breather since this bit of a spike here. Something similar here with copper. But it's made such a huge run. Again, I think all you can do is sell into this strength, and you're getting sell signals here, all in the momentum indicators as well. So I think I'd be selling into this strength, and then finally, just along with gold, I think you got to hold gold in this environment. I don't think you trade it. I think you just hold on to it. So just in summary, folks, just to reiterate. I'm liking the way our S&P is setting up now. Our short futures position is getting better and better all the time. We've sold the 4,900 put options on that. So basically, we're limiting our gains if the market falls to 4,900. But we took in a very sizable premium for that as well. So we'll walk away with a nice profit on that trade eventually if the market falls another roughly 3% from where it is now. So that will be a nice move for us, and we'll benefit from that. Then at that stage, I will consider actually selling puts to actually go long in the market, or I might just buy the stock futures outright or the S&P 500 outright, and I'll let you know at that time. But for right now, I would not be a buyer of stocks. Okay, this is Stephen from Share Navigator with a stock market update. And feel free to book a web meeting with me if you want to discuss any of the trading ideas in greater detail. Thanks a bye for now.